Which of the following factors has facilitated growth in the value of Australia's export in recent years? A. Decreased production costs of manufactured goods. This one is incorrect, as in 2023, the Australian government removed price caps on coal, which led to higher energy prices, which would have increased production costs. B. An appreciation of the Australian dollar. This one's also incorrect, as an appreciation of the Australian dollar will increase the prices of Australia's exports. However, it won't necessarily increase the value of Australia's exports. And the reason is because the value is calculated as price times quantity. Now, as the price of Australia's exports start to increase, foreign consumers are going to demand a lower quantity, which would lead to a decrease in the value of Australia's exports. Furthermore, because we don't know if the increase in price is more than the decrease in quantity or less than the decrease in quantity, this makes this answer invalid. C. Trade liberalization. This one's correct. In 2023, Australia has moved towards more trade liberalization, forming free trade agreements with the United Kingdom, which saw tariffs on Australian exports being removed, hence making our goods more cheaper in the foreign market. Thus, foreign consumers will purchase more of our exports, hence increasing the value of Australia's exports. D. This one's incorrect, as increasing trade barriers such as tariffs may cause foreign countries to retaliate and implement their own tariffs on Australian goods, therefore decreasing the value of Australia's exports. Australia's international competitiveness will rise when A. The value of the Australian dollar appreciates. This one is incorrect, as the value of the Australian dollar appreciates. This is going to mean foreign consumers have to exchange more of their currency to purchase Australia's exports, meaning the prices of Australia's exports have increased relative to foreign export prices, therefore decreasing Australia's international competitiveness. B. The domestic inflation rate is higher than that of our major trading partners. One is also incorrect, as it basically just means the prices of Australia's goods are more expensive relative to foreign goods, which will not increase Australia's international competitiveness. C. Labor productivity increases. This one is correct. As labor productivity increases, this decreases the cost per unit of output. So for example, let's say a person gets paid $15 per hour to produce boxes, all right? And let's say they produce 3 boxes per hour. Their cost per unit of output is $5. Now let's say labor productivity increases, and instead of producing 3 boxes, they can produce 4 boxes. This is going to decrease the cost per unit of output, as they're still being paid the same wage. However, they're producing more output. This is going to decrease the cost per unit of output to $3.75 per box. As the cost per unit of output decreases, Australian exporters can sell their good at a lower price, hence increasing Australia's international competitiveness. D. Domestic real wages increase. This one is incorrect. If domestic real wages increase, meaning Australian producers have to pay higher wages. An economic effect of globalization in Australia has been A. An appreciation of the Australian dollar. This is incorrect. Globalization has caused the value of the Australian dollar to both appreciate and depreciate due to the factors like the terms of trade and capital flows, which causes increases and decreases in the supply and the demand for the Australian dollar. B. Increased inflation. This one is also incorrect. Globalization has generally led to lower inflation in Australia by increasing competition and access to cheaper imports. Consumers can now purchase goods and services from around the world at lower prices than if they were produced domestically. C. Increased cyclical unemployment. This one is also incorrect. globalization involves countries demanding Australia's exports, in which the demand in Australia's exports have increased and decreased over time, which has influenced Australia's business cycle, causing contractions and expansions, hence increasing and decreasing the amount of cyclical unemployment. D. The lowering of trade barriers. This one is correct. Globalization has made countries more dependent on each other. Hence, by lowering trade barriers such as tariffs, it benefits both countries in the form of higher economic growth and a higher standard of living. Which of the following statements about trade intensity is correct? A high trade intensity ratio leads to increased dependence on foreign investment. This one is incorrect, as trade intensity does not have a direct relationship with foreign investment. B. Australia's trade intensity is low in comparison to China and the USA. This one is also incorrect. In 2023, Australia's trade intensity was 50% of GDP, while China was 37% of GDP, and the USA at 25% of GDP, primarily due to their strong domestic consumption. C. It measures the total value of imports and exports as a percentage of GDP. This one is correct, as it is the definition of trade intensity. D. It indicates the impact of barriers to trade on the Australian economy. This one is incorrect. Itself does not directly indicate the impact of trade barriers. However, it's the other way around. For example, an increase in barriers to trade would likely lead to a lower trade intensity. So question 5 wants us to figure out the absolute advantage and comparative advantage for both countries. To figure out the absolute advantage, we find what country can produce more of a certain good. To figure out the comparative advantage, we can find it out in two ways, using the opportunity cost method or the crisscross method. Let's find the absolute advantages. Looking at wheat production, Malaysia can produce 12 units of wheat, while Australia can produce 63 units of wheat. Therefore, Australia has an absolute advantage in wheat production. Looking at rubber production, Australia can produce 21 units of rubber, while Malaysia can produce 24 units of rubber. Therefore, Malaysia has an absolute advantage in rubber production. To figure out the comparative advantage using the opportunity cost method, we must calculate the opportunity cost of producing 1 unit of a certain good for both countries. Looking at Australia, the opportunity cost for producing 1 unit of wheat is equal to 21 divided by 63, which gives us 0.33, meaning for every 1 unit of wheat produced in Australia, the opportunity cost is 0.33 units of rubber. Looking at Malaysia's opportunity cost for producing wheat, it is equal to 24 divided by 12, which gives us 2, meaning that for every unit of rubber produced in Malaysia, its opportunity cost is 2 units of rubber. Looking at Australia's opportunity cost for producing rubber, it is equal to 63 divided by 21, which gives us 3, meaning the opportunity cost for Australia producing 1 unit of rubber is 3 units of wheat. Looking at Malaysia's opportunity cost for producing rubber, it is equal to 12 divided by 24, which gives us 0.5, meaning the opportunity cost for Malaysia producing 1 unit of rubber is equal to 0.5 units of wheat. You could have also done this in table form to make it easier to visualize, so turning this into a table, like this for example. But either way, to figure out the comparative advantage, you simply find the country with the lowest opportunity cost in producing a good. So looking at the production of wheat, Australia has a lower opportunity cost than Malaysia in producing wheat, therefore it has a comparative advantage in producing wheat. Looking at rubber, Malaysia has a lower opportunity cost than Australia in producing rubber, therefore Malaysia has a comparative advantage in producing rubber. And the second way is using the crisscross method, where you get both of the countries, give them goods, and then times those units together to give you the total unit of goods produced. And whatever combination gives you the highest total units of goods produced are your following comparative advantages. Let's use this table for example. We'll give Australia wheat, therefore we have to give Malaysia rubber. So 63 times 24 gives us 1,512. And then if we do our second set, so Malaysia gets wheat and Australia gets rubber, that is equal to 12 times 21, which gives us 252. Now, because the first set gave us a higher total unit of goods, these are the comparative advantages. So Australia has a comparative advantage in wheat production. Malaysia has a comparative advantage in rubber production. This way, you don't have to spend your time calculating the opportunity cost. Now let's go through the answers. A, Australia has an absolute advantage in wheat production, correct, and a comparative advantage in rubber production. This one is incorrect. Malaysia has an absolute advantage and comparative advantage in the production of rubber. This one is correct. Therefore, B is the answer. The terms of trade that would allow both countries to engage in international trade is, so for these terms of trade questions, you just need the opportunity cost for both countries. So going back to the graph, it costs Australia 0.33 units of rubber to produce 1 unit of wheat, and it costs Malaysia 2 units of rubber to produce 1 unit of wheat. So the terms of trade must be in between these two values. If it's higher than 2, this would only benefit Australia. If it's below 0.33, then only Malaysia would benefit. And if it was exactly 0.33 or 2, neither country will benefit from trading, therefore no international trade will occur. So the terms of trade for 1 unit of wheat is between 0.33 and 2 units of rubber, and the terms of trade for 1 unit of rubber is between 0.5 and 3 units of wheat. Looking at the answers, Australia receives 1 unit of rubber for 1 unit of wheat. This is within the terms of trade, so therefore both countries will benefit from international trade, so A is correct. B, Malaysia receives 0.5 units of wheat for 1 unit of rubber. Since it's not in between 0.5 or 3, international trade won't occur as only Australia would benefit. So B is incorrect. C, Australia receives 2 units of rubber for 1 unit of wheat. International trade in this case would also not occur as Australia would only be benefiting. So C is also incorrect. D, so Malaysia receives 0.5 units of wheat for 2 units of rubber. And since we need one of the goods to be a unit of 1, we can either times this whole thing by 2 or divide it by 2. So in this case, I'm going to times it by 2 because it's easier. So Malaysia now receives 1 unit of wheat for 4 units of rubber. Now obviously international trade wouldn't happen as only Australia would benefit, so therefore D is incorrect. The imposition of a tariff on food imported into Australia will result in A, lower domestic food prices and greater choice of food options in Australia. This one is incorrect. A tariff will allow domestic producers to increase their prices, and also a tariff would decrease the variety of food options in Australia as the cost of importing food increases. B, a reallocation of resources towards more competitive, unprotected industries. This one is also incorrect. It would do the opposite, as it will reallocate resources such as labor towards the uncompetitive, unprotected industries. C, an increase in domestic food production and rising employment levels in the sector. This one is correct, as domestic food producers are protected with the tariff. Domestic consumers will demand less imported food and thus move towards domestic food. Therefore, domestic food producers will make more revenue. Therefore, they will increase their output, thus demanding more labor in this sector. D, a decrease in government revenue. This one is also incorrect. A tariff is a tax placed on imports, so the government would start earning revenue. The deadweight loss created by the subsidy is equal to the area. Alright, let's look at the graph. So this here is the cost of the subsidy, and this triangle is the deadweight loss. Now let's look at the answers. A, ABF, ABF, that doesn't represent anything, so it's not our answer. B, BCD, BCD. That represents deadweight loss, therefore B is the correct answer. Australia's top 5 two-way trading partners in 2022 were, so this is a stat question and you can often find these stats on the ABS or DFAT, in which I'll link the websites in the description. But a general rule of thumb is that China is always first and Japan is second, so therefore answer A and C are already incorrect. And for 2022, the correct answer is B. Qantas purchased 3 Airbuses from France that required an overseas loan. The loan and the purchase of the aircraft would be recorded in the balance of payments as a, so we know the purchase of the aircraft from France are considered a import, which is recorded under the current account as they're a transaction of goods and services. Since Australia is paying for the aircraft, this means money is flowing out of the country and thus recorded as a debit. So this part here where Qantas imports 3 aircrafts from France would be considered a debit under the current account, meaning answer A and answer B are incorrect. And since Qantas required an overseas loan, loans are recorded in the financial account because they involve the transfer of capital. Since Australia is borrowing money from overseas, this represents an inflow of capital, which is recorded as a credit in the financial account. Therefore, answer C is incorrect, and answer D is correct. Foreign liabilities increase when A. Australian firms borrow from overseas financial institutions. Well, this one is true as it's the definition of foreign liabilities. B. Australian firms engage in direct investment abroad. This one is incorrect. It would decrease net foreign liabilities. C. Australian firms engage in portfolio investment abroad. This one is also incorrect as it would decrease net foreign liabilities. D. The Australian dollar appreciates. This one is also incorrect as Australian firms can pay off their loans that are nominated in foreign currency at a cheaper rate. Also, foreign investors may invest less into Australia due to the higher costs. Which of the following statements about foreign direct investment into Australia are correct? 1. FDI brings new technology that increases the efficiency of Australian firms. This one is true as FDI implies that the foreign investor has at least 10% equity in the Australian firm. So they're going to want it to succeed. And what's one way they can help? Well, they can bring in their own efficient technology. 2. FDI contributes to improved infrastructure. This one is also true as the Australian firm will now have the needed capital to invest into their own infrastructure. For example, they could invest into their digital infrastructure, upgrading their Wi-Fi cables from copper to optic fiber. 3. FDI contributes to Australia's financial account surplus. This one is also true because Australia is gaining money from a loan. This is recorded as a credit in the financial account, which would increase the financial account surplus. 4. FDI reduces employment, resulting in decreased taxation revenue. This one is incorrect. FDI would increase employment and also increase taxation revenue, as the Australian firm will now have the needed capital to hire more employees. If there's more people working, the government will earn a higher income taxation revenue. Now let's go through the answers. So we have 1, 2, and 3 correct. A, 1 and 2, this one is incorrect. B, 1, 2, and 3, this one is correct. Low inflation, rising unemployment, and high saving rates are characteristics of which phase of the business cycle? So we know it's not an expansion, since you would see unemployment decreasing and you would see inflation increasing. Same as for a boom. Now we have contraction and a trough. And the reason why I would go for a contraction over a trough is because it says rising unemployment. And during a trough, unemployment is relatively stable. It's bottom out, right? So therefore contraction would be the better choice in my opinion. But both of them are correct according to the answer key. So it's A or B. something is considered to be a leading indicator of economic activity while something is considered to be a lagging indicator? A. Share prices. This is a leading indicator. Unemployment rates, that is a lagging indicator, so answer A is correct. B. Building approvals, that is a leading indicator. Retail sales, that is a coincident indicator, so answer B is incorrect. C. Bankruptcies, that is a lagging indicator, so that's wrong. Job advertisement, that is a coincident indicator. D. New business startups, that is a leading indicator. Motor vehicle sales, that is a coincident indicator. According to the aggregate expenditure model, when the level of income is below equilibrium, then the inventory level of firms are... Alright, so the level of income is also known as total output. Now, if total output is below equilibrium, this means that aggregate expenditure is greater than output. Now, because demand is greater than supply, firms would start seeing their inventory decrease, so therefore they will increase their production the following quarter. So therefore answer D is correct. The strength of the multiplier is determined by, so what is the multiplier? The multiplier is determined by this equation. K equals to 1 divided by 1 take away MPC. K is the multiplier, MPC is the marginal propensity to consume. Now let's go through the answers. A. The impact of interest rates on the level of disposable income. This one is incorrect. Although interest rates do have an effect on the level of disposable income, it doesn't have a direct effect on the strength of the multiplier. B. The proportion of extra income spent within the economy. This one is correct, as it's the definition of the marginal propensity to consume, and therefore it has a direct effect on the multiplier, determining its strength. C. The level of business and consumer confidence. This one is incorrect, as it doesn't have a direct effect on the multiplier. D. Global economic conditions. This one is also incorrect, as it doesn't have a direct effect on the multiplier. If the Australian economy is operating at a point of 100 million below equilibrium, then restoring macroeconomic equilibrium will require... So we're 100 million below equilibrium, meaning if we want to restore equilibrium, we must increase spending. So therefore answer B and D are incorrect, as they have a decrease in spending. Now let's look at A. An increase in government spending of 20 million if the marginal propensity to save is equal to 0.4. Okay, so they gave us the marginal propensity to save, which is different from the marginal propensity to consume. Now, 1 take away the MPC is equal to the MPS, and since they already gave us the MPS, we can just substitute it in. So instead of 1 take away MPC, we can just do 1 divided by MPS, and that gives us the multiplier. Now let's look at A again. So an increase in $20 million, and to find the multiplier, it's 1 divided by 0.4, and that gives us a multiplier of 2.5. Now if we times the multiplier by the 20 million, we get a $50 million increase. So therefore A is incorrect, as we need a $100 million increase. Now let's look at C, an increase of $20 million if the marginal propensity to save is equal to 0.2. Well, the multiplier is equal to 1 divided by 0.2, which gives us 5, and then the multiplier times the increase in spending gives us 100 mil. So therefore, answer C is correct. According to the aggregate demand / aggregate supply model, a fall in a nation's productivity level will shift the... So we know productivity levels have a direct effect on aggregate supply. So therefore, answer C and D are incorrect. Now, because the level of productivity is falling, this will shift the aggregate supply curve to the left, because firms are now producing less output. So therefore, answer B is correct. Time lags can slow down the economic response of policy initiatives and can be categorized as having either inside or outside lags. The difference between the two is inside lags refer to Alright, so inside lags are lags where the policymakers have control over, while outside lags refer to the stuff that they don't have control over. So it takes them time to recognize and implement, so that's a inside lag. And since they can't control how fast it affects the economy, that's an outside lag. So let's go through the answers. A, inside lags refer to effect lags, while outside lags refer to implementation and recognition lags. This one is incorrect. B, recognition and implementation lags, while outside lags refer to effect lags. This one is correct. Which of the following are incompatible economic objectives? A, economic growth and equitable distribution of income. Well, this one is true, as economic growth often leads to income inequality, because higher income individuals and firms benefit more than lower income groups. B, price stability and efficient allocation of resources. This one is untrue, as price stability contributes to an efficient allocation of resources by allowing the market to respond to changes in demand. C, economic growth and full employment. This one is also untrue, as economic growth and full employment are usually complementary, as economic growth leads to more jobs, and more jobs lead to an increase in economic growth due to higher levels of spending. D, efficient allocation of resources and economic growth. This one is also untrue, as an efficient allocation of resources generally contributes to economic growth, as resources such as labor are being used to their productive capabilities. When an actual budget deficit exceeds the planned budget deficit, this may be due to A, a change in government resulting in a change in fiscal policy objectives. This one is not the correct answer, as it doesn't state if government spending or taxation increases or decreases, which would influence the actual budget. B, economic growth exceeding expectations, resulting in greater tax revenue. This one is also incorrect. If the government is earning more tax revenue, this would decrease the actual budget deficit. Therefore, it would be less than the planned budget deficit. Same thing for C. D, increases in the unemployment rate, resulting in greater welfare spending. This one is correct. If the government has to increase their spending, this would increase the actual budget deficit, which will cause it to exceed the planned budget deficit. In 2022/2023, the monetary policy stance adopted by the Reserve Bank of Australia was due to. So in 2022/2023, the RBA implemented a contractionary monetary policy stance, and this is typically done when the inflation rate is above the RBA's target of 2 to 3%. Knowing that, let's go to the answers. A slowdown in world economic growth and low domestic wage growth. This one is incorrect, as a slowdown in world economic growth would cause the demand for Australia's exports to decrease, therefore increasing Australia's unemployment rate. That, alongside lower domestic wage growth, would cause a decrease in consumption, decreasing demand pool inflation, and thus lowering the inflation rate below the RBA's target of 2 to 3%. Therefore, they would likely implement a expansionary stance. B, inflationary pressure due to increasing cost of production and supply chain disruptions. This one is true, as it was the primary reason on why the RBA implemented a contractionary stance. C, the decreased cost of borrowing funds impacting investment and spending. This one is incorrect, although this would cause demand pool inflation to increase, as it may potentially increase consumption and investment spending. This wasn't the primary reason on why the RBA implemented a contractionary stance. D, the decreased disposable incomes of households and firms. This one is also incorrect, as this would cause a decrease in demand pool inflation, as households and firms decrease their consumption and investment, which may cause the inflation rate to go under the RBA's target of 2 to 3%. Hence, the RBA would likely implement a expansionary stance. Which of the following is most likely to contribute to the growth in Australia's renewable energy market? A fall in incomes of Australia's closest trading partners. This one is incorrect, as this would cause the demand for Australia's renewable energy exports to decrease. Therefore, the market would likely make less sales, decreasing their revenue, hence slowing down their growth. B. Increased trade protection for the renewable energy industry. This one is also incorrect, as an increase in trade protection such as tariffs or subsidies may cause this market to become lazy and inefficient due to the lack of competition, which may lead to slower growth. C. Government funding to increase innovation and productivity in the energy sector. This one is correct, as it specifically talks about innovation and productivity, which would greatly contribute to the growth in Australia's renewable energy market. Now, the difference between this and a subsidy is that a subsidy is given to firms to mainly reduce their cost of production or encourage them to increase their output, which wouldn't contribute as much growth compared to an increase in innovation or productivity. D. Allowing cheaper renewable energy products from overseas. This one is also incorrect, as it would cause a decrease in the demand for Australia's renewable energy, as domestic and foreign consumers will purchase the cheaper foreign renewable energy, therefore decreasing the amount of revenue Australia's renewable energy market makes, hence slowing down their growth. A reason for the decline in productivity growth levels in Australia over the last 10 years is A. Faster than expected rates of technical progress and innovation. This one is incorrect, as higher rates of technical progress and innovation will allow workers to use more advanced technology, which would improve productivity growth, not declining it. B. Rising rates of economic growth. This one is also incorrect. If economic growth increases, this encourages firms to invest in more capital goods and inventory, as they will have a positive outlook on the economy, expecting a higher return in the future. Therefore, productivity growth will increase. C. Increased capital deepening. This one is also incorrect. Capital deepening just refers to the amount of capital available per worker. So when the rate of capital deepening increases, Australian workers can use more tools and machinery, allowing them to increase their output per hour, which improves productivity growth. D. Increased globalization causing structural change. This one is correct, as Australia undergoes structural changes due to globalization. The demand for certain industries and skills decreases, while at the same time, newly emerging industries may face higher demand but require time to adjust and attract investment, which can lead to a decline in productivity growth levels. Question 25. A. Calculate Australia's Terms of Trade Index for 2022. So that's just the export price index divided by the import price index times 100. And doing that, we get a terms of trade of 138.6. To identify the year in which Australia's terms of trade experienced its most favorable movement. So we're just looking at the year where the terms of trade increased by the most. So let's just fill in this column, 138.6. All right, so for 2022, the terms of trade increased by 15.5. In 2021, it increased by 24. And in 2020, it increased by 0.7. And then these ones are pretty small, so we can just ignore them. But we can see 2021 had the largest increase in the terms of trade. So we're going to leave 2021 as our answer. Outline 2 reasons for the trend in the terms of trade since 2018. So what is the trend? All right. So since 2018, so we're just ignoring all of this pretty much, but 89 to 138, well, there's been an increasing trend. So let's write that down real quick. Now, why did the terms of trade increase? So the export price index increased, but the import price index also increased. All right, so let's write this one down. Export price index, import price index. So in this case, our 2 reasons, they have to be related to the XPI, as an increase in the MPI would lead to a decrease in the terms of trade, right? But the trend has been increasing. So we can only talk about XPI. So what are the factors of the export price index? Well, we can talk about commodity prices. We can also talk about global economic growth and yeah, let's run with these two. So let's do the planning for commodity prices. So com prices. All right, so what we're saying is there has been an increase in commodity prices, which increase the terms of trade. All right, well, let's add more stuff to that, okay? So why are commodity prices important? Well, they make up 50% of Australia's exports. All right, then, what are commodities? Give me some examples of commodities. So we could go iron, coal, and liquefied natural gas. This is the top three, right? So far what we're saying is an increase in commodity prices would increase the terms of trade, as commodity prices make up 50% of Australia's exports, I.E, iron, coal, liquefied natural gas, right? And then we're going to talk about how this increases the terms of trade. Well, if commodity prices increase, that's going to increase Australia's export price index relative to the import price index. Make sure you always have relative when you're talking about the XPI and MPI. So that's our planning for 1. Now let's do our planning for 2. Global economic growth. So global economic growth, let's just give an example, right? China, we'll say especially China. Why China? Well, China is our top is the top country that Australia exports to, right? And then we'll just give a quick stat about 25% of Australia's exports go towards China. All right, so why does this matter? Well, if China experiences higher economic growth, they're going to demand more of Australia's exports. What happens when there's more demand? That's going to increase the price of Australia's exports, therefore increasing Australia's export price index relative to the import price index, therefore increasing the terms of trade. Oh yeah, I forgot to add this one. Therefore increasing the terms of trade. Right, so this is what rough planning would look like, and for the sample answer it would look something like this. So a possible reason is an increase in the prices of commodities, and then here I use a stat because 50% of Australia's exports are made up of commodities. Give an example. An increase in commodity prices will increase Australia's export price index relative to the import price index, therefore increasing the terms of trade. And yeah, I pretty much do the same thing for global economic growth. So pause the video if you want to read it. Looking at C, explain 2 impacts on Australia's economic activity of the change in the terms of trade index since 2018. So the terms of trade increase, right? There's been an increasing trend. All right, 2 impacts on economic activity. So every time you see economic activity, that's a pretty open-ended question. You can talk about a lot of things. You can talk about the big 3, which include the inflation, unemployment, and economic growth. You could talk about the balance of payments. You can talk about a lot of things, right? But me personally, I like talking about the big 3 as it's very easy to talk about. What else could we talk about for economic activity? We could talk about the exchange rate. So we'd say it would appreciate. And obviously, talking about how the value of the Australian dollar would appreciate in this whole entire paragraph, or this much lines, that's pretty hard, right? So let's just add extra. What happens when the value of the Australian dollar appreciates? Well, that's going to decrease Australia's international competitiveness. Right, so we just add that in as well. So what I'm going to do is, for the first paragraph, the first reason, or the first impacts here, I'm going to talk about all three of these on the same paragraph. All right. Now it's going to be a lot, but only do this if you're comfortable with time, or you're aiming for the big, like 95% on your exam. If you're just aiming for like a 70, 75, maybe a B, and just an A, you can just talk about like one of these or two of these in the same paragraph. But what I recommend you doing is definitely combining the impacts together. That's going to make your answers more coherent and more detailed, right? But again, you have to be good with time, so make sure you work on your time management. So what let's do the planning, right? I'm talking about the big three and appreciation of the Australian dollar. So I'll put this here, big three. Okay, so first thing I'm gonna talk about is economic growth. So an increase in the terms of trade due to the increase in the export price index, right? So we're just gonna talk about this. The higher XPI would then mean Australian exporters are making more profit, right? Australian exporters make more profit, therefore they will increase their output, which will then increase economic growth, right? So there's one of the big three checked off. And then we're going to go full stop. As firms increase their output, they will demand more labor, therefore leading to a decrease in unemployment. Yeah. As the unemployment rate falls, households have an increase in the disposable income. As they have an increase in disposable income, they can consume more goods and services. So that's going to increase their standard of living as well. We can add that as well. Now again, as households, demand more goods and services, that's going to lead to an increase in demand pool inflation. So that's going to increase our CPI. So that's like the rough planning, right? That's how I would word it. That's how I would structure it. But again, this is only if you want to make sure that you get 6 out of 6. All right. Now let's go to paragraph 2. So we can't just say appreciation. We have to say why does it appreciate, okay? So an increase in the terms of trade due to the increase in the export price index would make foreign countries pay more for Australia's goods. So we'll just say increased price. So a higher terms of trade due to an increase in the export price index will mean foreign countries have to pay more for Australia's goods, therefore increasing the demand for the Australian dollar, which leads to an appreciation of the Australian dollar. And then we talk about, as the value of the Australian dollar appreciates, this is going to decrease Australia's international competitiveness. Or you could just talk about how higher prices would decrease Australia's international competitiveness. But here's a sample answer from me. Something like this. Now, this is a lot of words, right? I don't think you would be able to fit this in to your actual exam paper. But one way that I kind of wrote all of this into my exam paper was, obviously I wrote really small, but I also wrote on the side. And I'm pretty sure the examiners, I mean, they're old, but like, they shouldn't care that much, right? It's not like you're going to lose marks for it. Just remember, don't write over here, but here's a sample answer, yeah. Now let's go on towards the next question. Question 26, A1. According to the extract, identify one possible reason for Australia's declining productivity and competitiveness. So obviously we're just going to read the extract. And here are the reasons. Reason 1, 2, 3, and 4. So I'm just going to write low levels of business investment. State the trend in labor productivity growth between 2018 and 2021. So we're going to look for the line that corresponds with labor productivity, and it's this dark solid line. Find 2018 and 2021, and between these 2 years you can see there's been an increasing trend, so you would just write increasing trend. Question 26b. Other than labor productivity, outline 2 factors that influence Australia's international competitiveness. So they gave us the outline verb, so we don't have to include that much detail, right? And it's about 2 to 3 sentences. Now, what are the factors that influence international competitiveness? Well, I think the most obvious one is exchange rates. You could also talk about domestic or foreign wages. And lastly, you could talk about trade barriers. So I'm going to talk about exchange rates and domestic wages, since I feel like those are the most common ones. And for exchange rate, I'm not going to use a real world example, like a real world stat, but for domestic wages I will. And the reason why I'm going to do this is just to show you the difference in quality, right? So let's start with the exchange rate. So exchange rate, we would have to give an example anyway. So an appreciation, or you could talk about a depreciation. You can use either as an example. It's only outlined, so we only need one example. You could do both if you wanted to, but I'm going to pick appreciation. So if the value of the Australian dollar appreciated, well, what's going to happen? Well, that's going to increase the cost for foreign consumers to purchase Australia's exports. And what happens when Australia's exports increase relative to foreign goods? Well, that's going to decrease Australia's international competitiveness. Now let's go on to 2, domestic wages, and I'm using a real world example. So in 2023, and I'm using 2023 stats because this is a 2023 paper, in 2023 minimum wage increased, right? So I'm talking about minimum wages this time from 23.23 an hour to 24.10 an hour. Now what happens when minimum wage increases? Well, Australian producers are going to have to pay higher wages, which is going to increase their cost of inputs. Now if their cost of inputs increases, they're going to have to increase their prices to at least gain some revenue. Now if they increase their prices, that's going to decrease Australia's international competitiveness. So what I'm going to do now is show you a sample answer and look at the difference in the exchange rate one and the domestic wages. So in the exchange rate one, I don't use a real stat, but if you wanted to, which you should, and you should learn this, but definitely learn stats, right? You could have said, in 2023, for example, you could have said exchange rates in 2023 depreciated from like 0.67 USD to 0.65 USD. Yeah, this would mean foreign consumers would have to pay a lower price for Australia's exports relative to foreign goods, thus increasing Australia's competitiveness. So something like that. That's using a real world stat, and you can see how it completely changes your answers. So, and it makes your explanation way better. And again, this is a outline question, so you don't have to do that much, right? Because then by then you're just doing too much. But let me show you them side by side. So here it is side by side. So the left one is way better because it actually uses real stats, right? So you're flexing on the marker. Alright, we're going to move on to the next question. So pause it if you want to read it. Using an aggregate demand / aggregate supply model, explain the impact of lower levels of business investment on the level of economic activity in Australia. Okay, so it's for 6 marks, and 99% of the time the model is 2 marks. So we have 4 marks to yap about economic activity. Now, what is economic activity? Well, you could talk about anything again. You could talk about balance of payment, the big 3, and I highly recommend you do the big 3 for the ADAS models and even AE models. So the big 3, economic growth, inflation, and the unemployment. And then for the graph, let's do the graph. Well, if there's lower levels of business investment, that is I, that is a component of aggregate demand. So we're going to expect aggregate demand to decrease, right? Everything else will be the same, but aggregate demand decrease. So our graph would look something like this. Price level, real GDP. And I'm going to start the economy at equilibrium, since most people do this. AD1, long run aggregate supply. And then there's going to be a shift in AD, right? Because investment is going to decrease. So our graph would look something like this. The price level is going to fall if there's a decrease in aggregate demand, and real GDP is going to decrease. So that's Y1, Y2, or you could also do YFE since you're in equilibrium. But that's just a rough plan of our graph. So let's go back to the explanation. So the first thing I recommend everybody do is just define whatever they give you. So define business investment. Now you're not going to get a mark for it, but again, it's going to make your work stand out from like the other thousands of answers, right? So I would define business investment. So what is business investment? Well, it's firms purchasing new capital goods. So if there's a decrease in firms purchasing new capital goods, well, what's going to happen to the companies that produce those capital goods, right? Well, they're going to make less revenue, as they'll make less sales. And if they make less revenue, what are they going to do? They're going to decrease their output. If they decrease output, that's going to cause a decrease in real GDP. And then once we talk about real GDP here, we could refer it back to the graph, right? So we could say a decrease in output, therefore decreasing real GDP from Y1 to Y2. So we're referring back to the graph. And then after we do that, we could say, therefore decreasing or slowing down the rate of economic growth. And that's our economic growth one done. Now we could talk about unemployment. Well, what happens if these firms that produce these capital goods decrease their output? Well, they're going to demand less labor. So that's the demand for labor. That's going to decrease. If the demand for labor decreases, that's going to increase the unemployment rate. If unemployment increases, we could talk about more stuff, right? We could talk about how there would be a decrease in disposable income. If there's a decrease in disposable income, there's obviously going to be a decrease in consumption, decrease in the standard of living. Now, consumption is also a component of AD. So you could also link this back to AD alongside the decrease in investment. So you could say something like, furthermore, the decrease in consumption alongside the decrease in investment would decrease aggregate demand from AD1 to AD2. So we're referring back to the graph again. And then after you do that, you could use the decrease in consumption, decrease in investment, or you could just say, therefore, the decreased aggregate demand will decrease demand pool inflation, which then will decrease the price level, which is the same thing as CPI, which will decrease the price level from PL1 to PL2. So I'm referring back to the graph and explaining, Now, if you did all of this, you would get full marks. But if you wanted to talk about extra stuff, there's more stuff you could talk about. I think you could also talk about labor productivity if you wanted to go extra. You would have to write all the way down here. But yeah, labor prod. And then, well, if labor productivity falls, you could also talk about how this may decrease Australia's international competitiveness in the future. And the reason why you can talk about labor productivity, or you should, is because business investment, well, it refers to capital goods. Capital goods, that's capital deepening, and physical capital, which are factors of labor productivity. And remember, this is an economic activity question. You can talk about anything you want. The more you talk about, the better. But just beware of time, obviously. So I'm going to show you guys a sample answer. So a sample answer would look something like this. So I define business investment. I then tell the marker what happens if business investment decreases. After I do that, I just refer back to the graph. See, I talk about AD, I talk about real GDP and the price level. And I'm using the graph within my explanation. And that makes my answer way better, right? And then over here, this is extra stuff if you wanted to talk about. You could talk about the contractionary gap. Since the economy started in equilibrium, the economy will now enter a contractionary gap. If you wanted to, you could also do like a little double arrow like this, and then CG1. And then you could say the economy will enter a contractionary gap bracket CG1 if you wanted to. It's not necessary, but yeah. So I think that's perfect. We're going to go on to the next question. Question 27. A1. State the forecast growth for the Australian economy for 2023/2024. So reading the extract, we can see it expects GDP growth to decline to only 1.5%. So we would write -1.5%. A2. State the value of the Australian government's expected budget deficit for 2022/2023. Reading the extract, it says it right here. For 2022/23, the budget deficit is now forecast at $36.9 billion. So $36.9 billion. B. With reference to three pieces of evidence from the extracts, identify and account for the fiscal stance of the 2022/2023 federal budget. So looking at this extract, I would assume it's a expansionary stance, as we're using a budget deficit, or there's a forecasted budget deficit. We could also use this as our evidence. So this would be our first evidence. Another piece of evidence would be tax cuts. Our third one could be right here. Need to keep financial expenditure expansionary. So it's going to be expansionary, and we have three pieces of evidence. So you would write expansionary fiscal stance. And then for our evidence, it would look something like this. Let's move on towards the next question. Question 27C, using an aggregate demand/aggregate supply model, describe how the government uses discretionary fiscal policy spending on infrastructure projects to achieve long-run price stability and economic growth in the Australian economy. So we have a 6-mark question. Our model is 2 marks. So we have 4 marks left to split, so I'll split it evenly, 2 and 2. And the reason why I find the mark allocations is so I can see how much detail I need to put for each response, right? And this will be super important once you do the extendeds. But let's do the planning for the model now. So government spending on infrastructure projects, the increase in G is going to increase AD. Now infrastructure projects are going to increase productivity. If productivity increases, that's increasing long run aggregate supply. If long run aggregate supply increases, short run aggregate supply increases as well. So we have a triple shift in the model. Now how about real GDP? Well, this one's pretty obvious, but real GDP will increase because AD is increasing and SRAS is increasing. How about the prices? Well, I reckon we should do stable prices. Why? Because this question specifically asks us about long run price stability. So if we do stable prices, that's going to allow us to use the model within our explanation. That being said, let's do the planning for the explanation. So they gave us discretionary fiscal policy. I reckon you should just define this. You won't get a mark for it, but again, it makes your work stand out. So what is discretionary fiscal policy? Well, it's just the purposeful changes in government spending or taxation. Keyword is purposeful. So after we define it, well, straight away we know the government is increasing their spending or spending on infrastructure. So we'd say something along the lines of government spending will increase aggregate demand from AD1 to AD2, and we're referring back to the graph when we're doing that. After we're done with that, we can talk about the infrastructure. So how does the infrastructure increase long run aggregate supply, right? So obviously an increase in infrastructure projects would increase labor productivity. But let's give a specific example. What type of infrastructure projects? Well, we could do highways. Highways, ports, etc. But let's do highways. And then who would this specifically help? Like, yes, it will help everyone as they can travel to work faster, etc. But this will specifically help delivery drivers. So we're getting really specific here. And delivery drivers, well, if they can travel faster, that's going to increase their labor productivity. So therefore, increasing long run aggregate supply. So long run aggregate supply increases as Australian producers and firms can now produce a higher amount of output without an increase in inputs. So for this example, the output would be deliveries and the inputs would be hours worked, right? Delivery drivers can now increase the amount of deliveries without a increase in hours worked. So that's going to increase long run aggregate supply. And then obviously you're going to refer it back to the graph, therefore increasing LRAS from LRAS 1 to LRAS 2. After you talk about long run aggregate supply, we can talk about short run aggregate supply. So why does short run aggregate supply increase? Well, because the cost per unit of output will decrease, which will increase short run aggregate supply, and then we'll refer this back to the graph, therefore increasing short run aggregate supply from SRAS1 to SRAS2, right? So as firms make more profit, or as firms can increase their output without an increase in inputs, that's going to increase real GDP. So here we could link this back to the model again, therefore increasing real GDP from Y1 to Y2. After we talk about real GDP, we can now answer this part of the question, economic growth. So we could move straight into economic growth, and that part's done. So we only have to talk about price stability. So let's do that. I'll put it right here. Prices. So prices will stay stable. We'll write that. Prices are stable. Why? Well, because the increase in supply, short run aggregate supply, will decrease the competition for goods because there's more supply. But also because of the increase in aggregate demand, which will increase inflation. So therefore prices are stable. So this is increasing inflation. Here I'll say price level. So this is increasing the price level, while the increase in supply is decreasing the price level. So this is why prices stay stable. And then obviously the reason why AD increases, we said because of government spending. But another reason we could also talk about the decrease in unemployment, right? As firms make more profit from being more productive, they're going to hire more employees, increasing the demand for labor. Now this, you won't get marks for this necessarily, but it will make you work way better. And you could explain more stuff if you wanted to, right? So an increase in demand for labor, decrease the unemployment. And then you go to the easy ones, disposable income increases. You could talk about standard of living if you wanted to. I don't think I did that though, but you could. So an increase in disposable income, which obviously then leads to an increase in demand pool inflation. Stuff like this. So demand pool inflation increases due to high consumption and also higher government spending. So I'll show you guys the sample answer right now. So here, if you look at the model, you can see how prices are stable. This should have an arrow right here. You can see how prices are stable, real GDP increases, and there's been a triple shift. You can see how I defined it. Alright, let's move on to the next question.